Public.com presents The Rundown, your daily market update in under 10 minutes. My name is Zaid Admani, and today is Thursday, August 14th. In today's episode, we'll tell you what the latest wholesale inflation report just said and why the numbers are spooking investors. We'll also dive into the latest product rumors coming out of Apple and Amazon's entry into the grocery delivery space. Then stick around to the end of the show to find out the latest NBA franchise to be sold and why this might be a sign of a sports bubble. We got a great show for you today. Let's go. Markets were up slightly on Wednesday, with the S&P 500 adding 0.3% and the Nasdaq was up 0.1%, both indices closing at fresh record highs. The big story yesterday, though, was crypto, especially Ethereum, which shot up over $4,700 for the first time in 4 years, and it's really close to hitting all-time highs again, which were set back in 2021. And then there was the bullish IPO. We talked a little bit about them on yesterday's episode. The crypto exchange saw its stock pop on its first day of trading. They IPO'd at $37 and then jumped up to $118 at one point, ultimately finishing the day at $68, which was an 83% gain on its first day of trading. So crypto and IPOs are still hot right now. Now, speaking of hot, we just got the PPI inflation report this morning, which measures inflation of wholesale prices, and it came in way hotter than expected. Wholesale prices in July rose by 0.9% compared to June and up 3.3% year over year. This was a bit of a shocker because economists were only expecting a 0.2% increase month over month. And this could be the first sign that tariffs are starting to have an impact on prices. So the PPI report doesn't get as much attention as the CPI report, but economists pay close attention to it because it measures prices that businesses are paying for goods and services. And if businesses are starting to pay more for products and services, then that could eventually be passed down to consumers. The market celebrated earlier this week when the CPI report came in cool and didn't show any major signs of tariffs impacting inflation. But this PPI report is showing a different story, and it could be an early warning sign that consumer prices might be on the rise pretty soon. I think investors were pretty excited about the Fed cutting interest rates in September. There was even whispers of a potential 50 basis point cut in September. But with this new PPI data, that probably changes things. Now, we still got another month until the Fed meeting, so a lot can happen between now and then. So as always, we'll keep you guys in the loop of all the ups and downs that are happening. So make sure you guys stay locked into the rundown. Let's run through some headlines. Starting with Apple. Apple is planning to release a ton of high-tech gadgets over the next couple years to make a comeback in AI and innovation. Bloomberg's Mark Gurman posted a report this week, and he highlighted a ton of products that are expected to come out from Cupertino. The headline product will be a tabletop robot that looks like an iPad mini on a motorized arm, designed to swivel, track you in a room, and chat with you using a totally overhauled Siri, which makes me kind of nervous. Apple's aiming to launch this product in 2027, and knowing Apple, it's probably going to cost like $9,000. Apple is also planning to make a push into home security, which includes a wall-mounted screen, facial recognition cameras, and automation features like lights turning off whenever you leave a room. Think of it like Apple's answer to Amazon Ring and Google Nest. And they're also planning to launch a smart speaker with a display next year that'll let you FaceTime and connect with other Apple devices. And that's not it, by the way. Mark Gurman has previously reported that Apple is working on a foldable iPhone, a cheaper VR headset, and smart glasses. And they're all expected to launch over the next year or two. Apple gets a lot of criticism for not innovating anymore and just releasing the same iPhone over and over again. So they're trying to change that narrative. But to me, it's going to come down to how much they can improve Siri and their AI tech. Because if the current Siri is going to be powering the AI tech in these products, it's going to be a disaster. I don't want anything powered by Siri in my house, let alone a robotic arm and a security system. Let's stick with the big tech theme and talk about Amazon. Amazon is planning to roll out same-day delivery of fresh food to more than 1,000 US cities, and they plan to expand to 2,300 cities by the end of the year. So pretty soon, Amazon will be delivering meats and seafood, dairy, fruits, baked goods, basically everything that you need dropped at your door in just a matter of hours. The grocery delivery will be free for Prime members on orders over $25, or you'll have to pay a $3 service fee if you're under that minimum. And for the few of you guys that aren't on Amazon Prime, you can still use this service, but you'll have to pay a $13 service fee for the order. Amazon said they've been testing this grocery delivery service in places like Phoenix and Orlando, and shoppers really like it. And investors have already taken a notice. They think that Amazon entering this space could do some real damage to existing grocery delivery companies like Instacart. Instacart stock dropped 11% after this news, and shares of DoorDash, Kroger, and Albertsons were also down. I'm kind of surprised it took Amazon this long to do grocery deliveries. I mean, people were already using Amazon to order groceries, but it was mostly things like paper towels, toilet papers, diapers, things like that. In fact, according to Amazon, over 150 million Americans buy groceries and household essentials on Amazon, racking up $100 billion in sales last year. And this doesn't include Whole Foods or Amazon Fresh. So now that Amazon's going to be offering same-day delivery of eggs, milk, and fruit, that could be a game changer. I'm definitely going to try it, but if I'm being honest, I kind of like going grocery shopping in person. I like going to the grocery store, picking out my fruit, lingering in the ice cream aisle, seeing what new flavors there are, trying some samples. I know it's a little time consuming and my wife thinks I'm crazy, but I don't know, it's kind of relaxing to me. Let me know in the comments on Spotify if you guys think that I'm crazy. Let's talk about some stocks making moves today. Shares of the burger joint Red Robin are up this morning following a better than expected Q2 earnings report. Red Robin has been struggling recently, but they're trying to turn things around. Comparable restaurant revenue was down 3.2% and guest traffic fell by 5.5%. Those aren't great numbers, but I guess Wall Street is happy that things weren't worse. Management pointed the finger of the revenue decline to aggressive promo deals from their competitors. But hey, investors seem to be willing to give Red Robin's comeback plan a shot, and the stock is up more than 5% this morning at the time of this recording. I've actually never been to a Red Robin. I think there's like 2 here in the Houston area, and the closest one to my house is like 15 miles away. Let me know in the comments if I'm missing out. Now, a stock not doing so hot this morning is Tapestry. It's the parent company of Coach and Kate Spade. They're seeing their stock drop this morning despite beating on both earnings and revenue for the quarter thanks to a 13% sales pop of Coach. The decline in the stock price is likely because of the warning the company issued about the hit that they're going to take from tariffs. Their guidance came in weaker than expected, and their CFO said that tariffs will cost them an extra $160 million for this fiscal year. You know, Coach has been one of the hotter fashion brands lately due to the popularity of their bags, and it's helping make up for the weakness in the Kate Spade brand, which saw sales drop by 13% in Q2. The stock was on a heater this year, up more than 70% heading into the earnings, but it's down more than 15% today at the time of this recording. Let's wrap the show with a fun fact. Another NBA team just got sold. This time it was the Portland Trail Blazers. They were just bought for $4.2 billion by Tom Dundon. Now, Tom Dundon has a pretty stacked sports investment portfolio. He owns the Carolina Hurricanes NHL hockey team. He also was an early investor in Topgolf, and he owns pickleball.com. And with the way that pickleball is growing, that website might be worth more than $4 billion one day. Now, his track record as a sports owner seems to be pretty good. The Carolina Hurricanes NHL team tends to make the playoffs pretty much every year. So the Blazers are getting a pretty good owner. The Blazers were currently owned by the estate of Microsoft's co-founder, Paul Allen. Paul Allen bought the team back in 1988 for $70 million, which is worth around $200 million today. So yeah, pretty decent ROI. Now, Paul Allen passed away back in 2018. So his sister, Jody Allen, has been running the team ever since. And now the team is being sold. You know, something that I've noticed is that we've had a lot of deals in pro sports recently, especially in the NBA. I mean, the Celtics just sold for $6 billion earlier this year. The Lakers sold for over $10 billion. And now the Blazers. And it makes me wonder if there might be a sports team valuation bubble right now, and some of the existing owners are cashing out before the bubble pops. But I gotta say, if I had billions of dollars, the first thing that I would do would be to buy a sports team. Well, all right, guys, that's the rundown for today. Hope you guys enjoyed today's episode. If you did, and you have like 8 extra seconds, consider giving us a 5-star rating on Apple, Spotify, or wherever you listen to your podcasts. And if you are listening on Spotify, don't forget to vote in today's Spotify poll. Leave us a comment on Spotify. We've seen all the comments come in over the last few days. Thank you to everyone that took the time to comment. You know, all that engagement really does help us out, and it helps other people find the show. Thank you guys so much for listening and watching. Shout out to Mike and Connor for all the help behind the scenes. And we'll see you guys back here tomorrow.